And let's put the spotlight on Max Healthcare. The company did come out with its numbers. So let's connect with the management itself. We are being joined by Abhay, who is the chairman and managing director of Max Healthcare Institute, joining us on the show right now. Hi Abhay, morning and great to be speaking with you as always. And firstly, onto your numbers, one of the metrics that we have been tracking was actually the EBITDA per bed. That has actually slipped to 68.5 lakh rupees from 73.9 lakhs in Q4 of FY25. What were the primary drivers of this sequential decline, and when do you expect the per bed productivity to revert to the peak levels?
We've given you two EBITDAs. You've seen the EBITDA for existing hospitals, and we've shown you the EBITDAs overall, including the two hospitals which we added in the last 12 months. So if I look at the new hospitals which were added in the last 12 months, which is the Greenfield at Dwarka and the acquisition which was done at Noida, those are what have dragged the EBITDA per bed down as they were expected to, because when say new facilities, obviously the EBITDA per bed and the profitability is lower. But if you look at apples to apples, the existing hospitals, and we determine existing hospitals by what is more than 12 months old, there has been an increase in EBITDA per bed.
Okay, Mr. Soy, I understand what you mean on that front, but let's take a look at bed occupancy. That has been steady at 76% despite new capacity. What are your strategies to drive occupancy beyond 80% while maintaining your margins, especially in your newer facilities like Mohali, for instance?
Well, first and foremost, what you're going to see is in Mohali new beds coming. So these are new brownfield beds which are coming in, which essentially we started trial runs in Mohali end of July. This is for 160 beds. That takes up the capacity of the Mohali hospital by about 80%. And we're going to see similarly capacity addition of 260 beds, 270 beds in Mumbai in phase 1, which is going to be again over the next couple of months. We're going to see the same thing in Smart with about 400 beds. So right now we're coming up with more capacity. So I think the goal is to maintain these capacity levels with enhanced capacity rather than enhancing the occupancy.
Okay, Mr. Soy, the average revenue per operational bed growth remains muted at 78,000. Is this due to payer mix, case mix, or competitive pricing pressure? And how do you see it trending in FY26 with higher specialty mix?
Again, ARPOB, apples for apples of existing hospitals have moved up by about, I think, 6%, whereas it's been muted if I look at it on an overall basis. Of course, this is due to addition of new hospitals, particularly the two that we commissioned last year. Do keep in mind, very early before that, perhaps 3 months, which we are not considering as existing hospitals, was also the Lucknow and the Nagpur hospitals. So we've got 4 young hospitals in the sort of fray, of which 2 I'm not counting as new hospitals, but 2 I am. And on an overall basis, you may say ARPOB is muted, but apples for apples has been an increase. And of course, there's always a playoff between increase in occupancy and increase in ARPOB. And in this situation, you've seen a significant increase in occupancy.
Sure, Mr. Soy, okay, that's the outlook on ARPOB, but let's talk about your pathology business, which is the Max Lab pathology business that grew 19% year on year. How do you plan to scale this vertical further? Could we see any strategic partnerships or digital health integrations?
So digital health, I think across the board for our hospitals is about 29% of our revenues are coming through our digital platforms. So we've seen patients, customers, etc., embracing this, and this is the new way of perhaps the new patient buying behavior as well. When it comes to diagnostics, it's been growing at 20% every year. I think, and quarter for many years and quarters now. If we get an opportunity to do a bolt-on acquisition or something, we certainly would. But this is not necessarily, this is adjacent business. We use our own labs. We've done sort of spread our arms pretty wide. We've done that because we believe We are the first port of call from a reputation standpoint as far as patients are concerned. The efficacy of our results, the accuracy of our results, again, is something that our hospitals rely on. Even the senior clinicians who are doing such sort of phenomenal work and really at the apex of clinical excellence, they rely on the efficacy and the efficiency of our laboratories. And that is exactly what we are taking in retail to customers to their doorstep. And that is what Max Lab is all about. So it's high end, but it's growing at about 19-20%. If we have like-minded, similar quality labs, we'll be happy to sort of bolt them on.
Okay, that's right. Talking about the net debt, it has risen to 1,755 crore from 1,576 crore in March. Now, how much of this is linked to brownfield expansions, and do you foresee any refinancing or asset monetization to optimize the balance sheet?
No, we also have about 900 plus crores of cash sitting. So if you look at it from a net debt standpoint, I think presently we have 0.7 times net debt to EBITDA, which is well below our internal threshold of 2.5 times debt to EBITDA. So given our EBITDA growth as well as our EBITDA translation to free cash flows, which this quarter was about 65%, we are, I think, more than comfortable sort of funding our growth and keeping these level of debt. So I don't foresee any refinancing, so to say. I mean, if we do, as a matter of hygiene, to bring down our interest rates, etc., that's different. But there's no refinancing or additional financing required.
Okay, and Mr. Soy, once again shifting focus to your Mohali facility with 160 beds at Mohali now in the trial runs phase. What is the expected revenue and EBITDA contribution from this facility in FY26, and how quickly can it reach a break even? And in terms of break even, will it reach within weeks, or what's the outlook here?
Well, break-even will be a matter of weeks, in fact, because it's a brownfield. So I'm not very concerned about that. We don't give individual sort of hospital numbers or guidance, so to say, on an overall basis. So I'm going to kind of avoid answering the bit about the profitability and this thing. But I can tell you the break-even in brownfields, and this is not only Mohali. Similarly, at Nanavati in Mumbai, over the next 60 odd days, or if you're looking at Max Smart in Saket, which is 400 beds coming up, they should have the same trajectory as well, which is break even in matter of weeks rather than quarters or anything like that.
Mr. Soy, one last question. You have large-scale brownfield and greenfield expansions, let's say Nanavati, Saket, Mohali, Thane, Zirakpur. Now, how are you managing execution risk, cost inflation in construction, and talent acquisition in these new projects?
Well, on a daily basis, that is what execution is about. You have to manage not only the known knowns, but also the unknown unknowns. Projects I'm learning are extremely sort of open to various sort of winds, and it's about managing them, whether it's labor shortage or if it's sort of design issues or whatever else it is. So I think we deal with it, and the more we deal with it, the more we learn. As far as leadership is concerned, of course, you've seen the new KMP, Mr. Bridge has joined us, and he's going to be heading the projects. He brings vast experience. He was heading, I think the project works at DLF prior to that. So he's somebody who's come on board to help us with the sort of projects that we're doing, and we're building a very robust organization, because this is not only a requirement for today. I think, what we require is, given the fact that it's a multi-decadal opportunity, and we are going to be using our immense cash flows going forward year on year in order to execute, in order to set up more hospitals, which are so required by the country as we are sort of marching towards being the third largest economy in the world. And as our population sort of grows in age, perhaps the frequency to hospitals will also increase. So I think we're building these capabilities, and it's always be work in progress.
Okay, Mr. Soy, I appreciate you joining us, and thanks so much for sharing the outlook in terms of your capacity expansion and the plans ahead, both on the greenfield and brownfield front. So that was the management of Max Healthcare talking about how their quarter went by.